Ever wonder why you get bombarded with credit card offers the second you turn 18? It's not magic, it's data. A mountain of information about you, your spending habits, your ability to pay back a loan, all compiled by unseen forces to create a financial snapshot. But who are these data detectives, and how exactly does it all work? That's where Equifax comes in. They're one of the three major credit bureaus in the United States, alongside Experian and TransUnion. Think of them as the guardians of your financial reputation, keeping track of your credit history and making it readily available to lenders. But what exactly does Equifax do with all this information? Why does your credit score matter so much, and how can you take control of your financial future? Let's dive in. The Big Three, unveiling the credit bureaus. First things first, credit bureaus aren't lenders themselves. They don't issue loans or credit cards. Instead, they act as a central hub for your credit information, collecting data from lenders, creditors, and public records. This data gets compiled into your credit report, a detailed document that paints a picture of your financial history. Think of it like a report card for your borrowing habits. It shows things like your credit card balances, loan payments, and any outstanding debts. On-time payments and responsible credit use contribute to a good credit score, while late payments and delinquencies can drag it down. Why does your credit score matter? Now, this credit score is a big deal. It plays a crucial role in almost every financial decision you make. Need a loan for a car or a house? Your credit score determines the interest rate you'll qualify for. Looking to rent an apartment? Landlords often use credit scores to assess potential tenants. Even insurance companies can factor in your credit score when setting your premiums. In short, a good credit score opens doors and saves you money. It makes you a more attractive borrower, allows you to qualify for better interest rates, and can even unlock better deals on things like insurance. On the other hand, a poor credit score can make it difficult to get approved for loans, lead to higher interest rates, and limit your financial options. How does Equifax work? So, how does Equifax actually compile your credit report? Here's the breakdown. Data collection. Lenders and creditors regularly report your activity to the credit bureaus, typically on a monthly basis. This includes information like your credit card balances, loan payments, and any late payments. Report generation. Equifax takes this data and uses it to create your credit report. This report outlines your credit history, including the types of credit you have, how much you owe, and your payment history. Credit scoring. The information in your credit report is then used to calculate your credit score. Equifax uses its own proprietary scoring model, but there are several different credit scoring systems used by lenders. Taking control of your financial future. The good news is that you have a lot of control over your credit score. Here are some key things you can do to improve it. Pay your bills on time. This is the single biggest factor influencing your credit score. Make sure to pay your credit card statements and loan payments by the due date. Keep your credit card balances low. A good rule of thumb is to keep your credit utilization ratio, the amount of credit you're using divided by your total credit limit, below 30%. Don't apply for too much credit at once. Multiple credit inquiries can ding your score, so avoid applying for a bunch of loans or credit cards in a short period. Review your credit report regularly. You're entitled to a free credit report from each of the three major bureaus every year. Make sure to review your report for any errors and dispute them if necessary. You can access your free reports at Annual Credit Report. Build a positive credit history. If you have limited credit history, consider getting a secured credit card or becoming an authorized user on someone else's account. Empowering yourself with financial knowledge. By understanding how credit bureaus like Equifax work and taking control of your credit report, you can empower yourself to make informed financial decisions. A good credit score unlocks a world of possibilities, allowing you to qualify for better loans, get better interest rates, and achieve your financial goals. Remember, knowledge is power. So, take charge of your credit report, build a strong financial foundation, and watch your financial future unfold. With that said, thanks for watching, and until next time.